So that 3% mortgage rate you've got may be keeping you trapped in a house that no longer fits your lifestyle. You're cleaning rooms nobody uses, heating and cooling square footage you barely walk into, maintaining a home that feels too big, too expensive, too much work. Yet you keep delaying the move you already know you need to make. Look, I get it. The fear is simple. Why would you give up a 3% rate and then have to buy something closer to a 6.5% rate? But here's the part most people never calculate. On a 30-year loan, every $200,000 borrowed cost about $842 a month at 3%. At 6.5%, that same 200,000 cost you about 1,250 a month. So yes, your mortgage payment may increase by roughly $400 a month for every $200,000 borrowed, but that increase may be partially offset by lower property taxes, lower insurance, utilities, maintenance, fewer repairs, and the reduced cost of no longer carrying a house you've already outgrown. So the proper question to ask yourself is not entirely a financial one. It's not strictly, do I want to trade my lower interest rate for a higher one? Nobody wants to do that. The real question is, what is the true cost of staying? How is this house restricting your lifestyle? What changes would make your spouse happier? Would moving out of state, downsizing, relocating to a different area give you more freedom, less maintenance, and a better quality of life? And I can promise you, if you purchased your home 5 or more years ago, you're likely walking away with a substantial profit over your purchase price. And that's equity that can help you offset some of today's higher interest rate costs. Because look, we only have a limited amount of time on this earth. And the older we get, the more quality of life matters. At some point, the smartest move is not protecting a low rate. It's protecting the life you actually want to live.